On behalf of Phillip Capital India Private Limited, we welcome you to this call for Heidelberg Cement India Limited for the quarter and year ending 31st March 2018. On the call we have with us Mr. Jamshed Naval Cooper, Managing Director, and Mr. Anil Sharma, Chief Financial Officer. I would like to mention on behalf of Heidelberg Cement India Limited and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements relating to with future developments and economic performance. These statements may be subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statement made. Heidelberg Cement India Limited and the management of the company assumes no obligation to alter or update these forward-looking statements, whether as a result of new information or future events or otherwise. Also, Heidelberg Cement India Limited has uploaded on the exchange a copy of the presentation. Participants may download a copy of the presentation from there or from the website of the company. I will now hand over the floor to Mr. Cooper and Mr. Anil Sharma for opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, sir.
Thank you, Weber, and thank you everybody to joining the conference, this earnings call. I suppose you would have seen the results and made your points, but just to take you through the results which are there in front of you. The presentation is there with you in front of you. Coming to going to page number 4, you can see the Indian cement industry, how it is progressing from the last quarter and now it is progressing in the last 2 quarters. The growth seems to be coming in and that is a good sign for the Indian industry. So there we are. If you look at even to just on the one point which I would like to mention here, that earlier if you looked at something some 10-15 years back, there used to be a correlation between GDP growth and cement demand, which had gone wonky in between, and for the last we could say from 2009 onwards, 10 onwards, 11 onwards, it had gone worrying, and there was no correlation between GDP growth and this. But if you look at it, now we see that in the last some months and a few quarters and a year and the forecast which we have also made, there is seems to be some positive correlation which is happening. So that is some good sign to look at it. Coming to the highlights, sales volume, EBITDA, everything has been the highest ever produced given by this company so far. On premium products, we introduced Mycem Power just 2.5 years back, and now we find that it is about 2.5x. That is, the volume has grown, and it occupies almost close to 9% of the share of our total our trade business. There is a focus there to produce premium products, and as the market becomes more and more sensitive going forward and people have the purchasing power, they will go for the premium products. Lead distance reduced to 355 kilometers, which is mentioned in our presentation. On the entire ECB, $125 million repaid, and net debt is reduced to about 468 crores. Net debt to EBITDA is about 1.29x. And there is a further improvement which is on the working capital. That is again a focus area for us. Board has the recently concluded board meeting on the 24th. The board has recommended a share or dividend of about 25%, which is 5% more than the previous year, subject to approval by the AGM. On the WHR, we installed WHR, and then we have been improved upon it. There is headroom in WHR, but yes, the results have been relatively better than the previous year, because it has now been 2.5 years for the WHR to settle down. So it is delivering the results, and the generation was about close to 70 million units. And the biggest achievement, what we call it as, which gives us more pride, is that we got a certification from DVI. This is from DUE, which says that we are 6.37x water positive. This was one of the, vision which we had been drawing for at least last 3-4 years, and we succeeded in achieving this. So in terms of, you would have seen our slides in the later part of that the result of this is that, we have been able to create a better green cover on the plant. Going to I'll skip slide 6 because I have already spoken on this. Coming to slide 7, EBITDA on a quarter-on-quarter, there is a growth of about 52%. On a year-wise basis, it is 30%. At a EBIT level, it is growth of 73% and 39% for the year round. And profit after tax is 41% growth. About the GST translates into about 52 crores, and 75% translates to the growth. It translates to about 133 crores on profit after tax. Volumes, gross realizations, everything has gone up. It is because of a very astute planning about the market, the management of markets, our logistics cost. So that says it all in this. Coming to slide 8, you can see the waterfall is very clearly that the GSR has been the biggest contributor. That is because of the market, the brand positioning, and things like that. Don't be worried about the freight part because that has been an amendment in the method of operation, so post GST. So that has affected, and there is definitely a contribution to this negative impact is because of the fuel price increase. So that is it. On the balance sheet side, the balance sheet has notched better. The size of the balance sheet has increased. And the cash conversion cycle has been about 1.1 days. So there is a significant improvement in the cash conversion cycle. All this translates and leads takes us to slide 10, where the company has been able to retain its rating to AA+. So this is as far as the performance of the company is concerned. Coming to us on next slide is we have launched the new product, which is this MySim Power in front of you, which is visible. Coming to just to brief you, we have always been talking about financial figures. On the qualitative part, the back end, we have not been talking too much over these years. But I said let us give you some idea on what we do, besides making cement also. The part is, we talk about health and safety, which has been a driving force as per the global parent. Health and safety is our foremost priority, and it remains. We run not many programs. The target is to achieve zero harm by 2020. So this is what the target on health and safety is concerned. On sustainability and green development, we prefer to, we prefer to give back to Mother Earth whatever we take out and keep the earth environment clean. So on target here again is to spread maximum green cover in the plants wherever possible, every inch what is possible we can. And as long as we have the water to sustain that, we would prefer to plant a tree. And so that's what is going on. So in the pictures you can see the green cover of the plants has been growing. And there is another slide which is 14, which shows you a lovely picture of plant mines, which was an old mine where we converted into virtually a lake. It's a huge piece of water body, and there we are developing some picnic spots around it. So that is also one of the aim. We do this everything by volunteering, and the people volunteer for all these things. The investments is very low in these type of activities. It's more of driven by the contribution as people think that they should contribute to Mother Earth and to the environment. What this is all a generation out of that. On awards and accolades, we got number of certificates at the national level. Whether it is mines in energy efficiency, in terms of 5-star rating as our mines at Patharia. Then again, mines, we got another report for Amar Chandra also. And environment monitoring and overall performance in the Indian Bureau of Mines, there is also an award given to us. Coming to the outlook, cement demand likely to grow. We are expecting that it should continue to grow, and we hope that this 7% growth should come in. If nothing goes seriously wrong as far as these things are there. Unless there is a fall, the only caveat here is the oil prices, crude, which can make the scene go different. We are seeing a lot of spending on government spending because we operate in other regions, not only in central, but then we have a fairly good idea of what is happening on ground. And progress is seen. The state elections in Madhya Pradesh are going to be there, and we expect that things will be positive. There are some newses which you can check on YouTube and other places where the grain production has gone up significantly. So in the markets where we operate in MP, the food grain production has been very high. The reserve price given by the government has been very, very lucrative. So everybody is longing to give the material to the government. So there are lines of people and tractors and trucks are waiting to deliver the product to the government and getting their money from there. Monsoon, the forecast is good. So we are expecting about 97% of the long period average monsoons this year. So again, a very good note to be very happy about it. As I mentioned, the concerns, because with the green picture, we also have a brown picture, and that gives us a picture of the crude prices going up, and that is something to worry about. Depreciation of the Indian rupee against the dollar, that is also one of the concerns. But yes, somebody loses, somebody gains. The exporters will have a heyday, their exports should go up. So anyway, the country gains in the overall way. On the other concern which we have is ban on pet coke. This could become a big issue for the industry. As much as for us, there are other people who use far more pet coke than us, and for them it could be a more of a concern. But anyway, if there is a ruling, we have to all abide by it, and we are already having plan B, what to do about it. So we are not yet firmed it up, but we have been carrying a plan B always, what is to be done in case such a type of a situation comes up. On compliance norms and GST, e-way bill is now in place, and things are moving on. Now it's a good thing. I think the dealers are falling in line with it. So some good system is coming in thanks to the stringent measures by the government. I think the more serious the government is, becomes the much better the business scenario will turn. Initially, definitely there will be hiccups, there will be pain, but in the long run, we will all tend to benefit because you will have a system which is much more in a robust system in place where the government, the exchequer gets his money and it does not land into individual pockets. So I think the nation wealth improves and as I see it, the future is bright for India. So thank you very much for here so far, and we can take the questions from here. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. Anyone who wishes to ask a question, please press star and 1 at this time. The first question is from the line of Dheeraj Pathak from Goldman Sachs. Please go ahead.
Thank you for that commentary. Sir, is there any capacity expansion in the pipeline? Can you highlight?
As of now, there is nothing with us on capacity expansion. But yes, minor tweaking keeps happening in the plant to improve the capacity utilization.
Okay. So, wherever our assets like the Madhya Pradesh and, what is the scope for brownfield expansion? Can you just highlight the potential at least?
As I said, right now there is no potential is not there, which I mentioned in the past, my earnings call also. But we do have a headroom to improve the existing equipment to deliver more.
Okay. So when you say that, does it mean that you don't have the land for brownfield expansion and the mines there?
Yes, the mines is an issue. I have the land. Land is not an issue. But, if I have to run the plant for 40 years of limestone with the existing limestone quarry, so I need to have this 40 years period for that.
Okay, understood. And sir, the volume growth, although our profitability is good, but volume growth has been lagging for the last 2 years versus the industry growth rate. So in your target markets, what was the growth 4% only, or why did we grow below industry?
Around the same. It should be around the same. See, in target markets in central India, specifically we operate in, let us be clear, that we operate in Madhya Pradesh and Uttar Pradesh. We do not spread, if you look at my distance to the customer, that is reducing. Okay, so we are very clear about it in which markets we want to sell. We do not sell our product. I'm already operating at, for the year round, it is at 85% capacity utilization. I can go 100%, but if I'm not going, I don't see a value for money coming in. It's no sense stretching beyond that point.
Okay. And last question, sir, the fuel mix, if you can give, how much is domestic, how much is petcoke, how much is imported coal?
As I said, I'll give you a petcoke idea. It is about 70%. Petcoke is being used. Rest coal is total linkage coal, not an issue. So we have that linkage going on till end of this year. So that will sustain us.
And after the end of the year, what will happen to that linkage coal?
Then we'll go for auction.
Okay. All right. Thank you, sir.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Abhishek Ghosh from Motilal Oswal Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. Just wanted to understand one thing. What will be a trade to non-trade mix now?
About 80-20.
80-20. And in terms of some premium products which constitute about 9% of our overall sales mix now.
Or trade sale, overall trade sale.
So yeah, so it will be closer to about 7% of our overall sales.
Correct.
What's the scope of increase there in terms of, is there further scope, or how should one look at it from, say, 2 to 3 years perspective?
Yeah, I would say, that the target is to convert 100% to that.
Okay. And what will be the realization gap here?
The realization gap is, as of now, about 10 rupees.
10 rupees per bag. Okay. And so just one thing, if you could just help me with the fourth quarter utilization, capacity utilization would be closer to 94-95%?
Or 92.
About 92%. Okay. Okay, sir. Thank you so much for answering my questions and all the best.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Vinay Menon from Centrum Broking. Please go ahead.
Hello, sir. Thanks for the opportunity. So I would like to ask, how have the prices been for the first 2 months of Q1 FY19?
Flattish.
Prices, yeah, across the markets.
Marginal dip.
Okay.
Over the marginal dip, but yes, I would say it is more flattish.
Okay. And the petcoke price for Q4 FY18, if you can give me like an average petcoke price, landed price.
Petcoke landed price is about 10,000.
Okay. And the same continues, sir, for Q1 FY19?
As of now, it is stable at that.
Okay. Thank you, sir. Thanks a lot.
Thank you. The next question is from the line of Dhiresh Pathak from Goldman Sachs. Please go ahead. Dhiresh Pathak from Goldman Sachs, your line is in the talk mode.
Hello. Yeah, can you hear me?
Yes, thank you.
Okay. Thank you again. So the clinker capacity that we have, this is in the Satna region, right?
It is in the Damo region, I would say. Yeah, okay, you can call it a cluster. Satna cluster, you can.
Okay, so in that cluster now, we are running at 94% exit utilization.
92. But last quarter only. Otherwise, for the year round, it is 85.
85. I would assume that clinker utilization would be in the similar level. So would you have sense in terms of the aggregate industry, the Satna cluster clinker utilization?
I won't have idea on this because these figures are nowadays not available in the market.
Okay, but because you are running at this high utilization, would it be fair to assume that it would be not very far away from, the overall aggregate cluster clinker utilization would not be like too much deviation from 86% that you have?
I really cannot tell you because some people operate, what capacity really we cannot tell you. But it should be around 80%. I do not expect it to cross 80%.
Okay. So why are we not seeing much higher? Can we expect to see much higher price increases going forward because that the utilization is really high?
Utilization is utilization can also mean the reverse of it. You dump more and the prices will come down. Probably if somebody reduces the utilization by 10%, you may see a 30% increase in price. So it's never utilization is never an indicator of that you are reached 90%, so the prices will now boom up. Sometimes the industry is crazy, can also push volumes and bring down the prices. You may have a higher utilization but low value realization.
Okay. All right. Thank you.
Thank you. The next question is from the line of Mudit Agarwal from India Nivesh. Please go ahead.
Hello. Good afternoon, sir. Thanks for taking my call, sir. I just want to know the current maturities amount included in the other financial liability.
Pardon, could you repeat that?
The current maturities amount.
Outstanding today it is 150 crore rupees, 1.5 billion, which are scheduled to be paid during the financial year 2018 and 19.
Okay. And sir, the incentive amount which is included in the other...
I'm sorry to interrupt you, Ms. Agarwal. Please speak on the handset mode. We can't hear your question clearly.
It is audible, sir?
Now it is. Thank you.
Yeah. So the incentive amount which is included in the other operating income for this quarter?
Yes, it is.
For the whole year?
No, it is for the quarter. So it is based on the tax incentive given by the Madhya Pradesh state government.
Yeah.
And based on that calculation designed in the industrial policy, we accrue that incentive every quarter in our books.
Okay. So for the whole year, how much it is booked in the book?
It depends upon the quantity we sold in the state of Madhya Pradesh, but it is in the range of 20-22 crore rupees per annum.
Okay. Thanks, sir. Thanks.
Thank you. The next question is from the line of Gunjan Prithyani from JP Morgan. Please go ahead.
Yeah, hi, sir. Thanks for taking my questions. I just had a related question on this pricing. Now that the utilization of the cluster is fairly high and the competitive issues that we faced last year with the M&A, JPA assets being ramped up, that is also largely behind. Do you think that these prices hold on because there is no big expansion coming in the market in the region as well?
If you are asking me prices will hold on, I would say yes, the prices will continue to hold on because if monsoons are going to be good and the way the agricultural income has come in, going to realize, which will be realized in this quarter, is going to be phenomenal. So I think going forward, I don't see a price issue. The demand, as long as the demand can clock around 5 to 6%, things should be okay.
Do you foresee any risk from these, in terms of new capacity expansion or any big M&A ramp up which can have an implication on the region? On the similar lines, does this Century JPA deal would have any implication on the region?
Yes, see, Century is already operating in the market, so it is just only a change of management.
Yeah.
So that should not be a problem. Dhar will have an implication marginally onto some markets which are towards the western side. So those markets could see a little pressure, but we must not forget one thing, that the people who are putting up capacities already have a substantial market share in those markets. And any rupee drop means, if the capacity expansion is going to be another 10% in that market, so they will not risk it for the 90% of the products what they are selling in that. So one has to act, probably they will be under more pressure than anybody else.
Okay. Got it. So you don't see any big competition risk like we faced last year. I mean, having said that, even prices didn't collapse with that M&A as well. Sir, the second question was on this demand. You said 4 to 5% was for F18 for central region?
About 6% central. About 5 to 6% should be there.
For F18, and you think it's and any sense on what's driving this? Is it more of trade segment? Is it more of non-trade segment? What are the drivers?
It's all the drivers are there. I think non-trade is also equally picked up. We are not in non-trade too much.
Sure. Okay. And lastly, on your this expansion thing, given there could be some scope for debottlenecking at your existing plants, but if we were to think more from a 3 to 4 year perspective, are we working towards participating in any of these limestone bids to look? I mean, more from the perspective, how do we see capacity growth coming within Heidelberg?
Even if today operating at 85% capacity utilization, I have got a debottlenecking ability to ramp up the production by another 10%. So we are already having room of about 25%. Even if you grow at close to 7%, 3.5 years, 4 years of growth we already have in our factored for that. So for the existing plant. And yes, of course, if there is an opportunity of any availability, or we will look at, but there are not too many mines left. So we'll have to see. We have to play by the year.
They're open to any newer markets to expand capacity?
Yes, sure. We are looking at.
Okay. Thank you so much.
Welcome.
Thank you. The next question is from the line of Parag Khare from TCS. Please go ahead.
Good afternoon, sir. Congratulations for the excellent set of numbers. So my question is, what kind of top-line growth we are targeting for FY19, the top-line and EBITDA growth?
For targeting for that, I won't be able to give you any figure on this as a...
Okay, but do we see any pressure on EBITDA margin because of the competition sake, or maybe internal productivity and efficiency related reasons?
No, I don't think we are not seeing. No, I don't think we see any negative part of it. We are not able to foresee anything which is, as I said, expecting barring 1 or 2 factors, but which the government will surely intervene and take action on that.
Okay. And sir, because of the state election in MP, do we see any impact on the negative impact on our sales, because the government tenders may not be out because of the code of conduct, and any other related demand may slow down if there is any government intervention in any of the projects or any of the tenders?
I think, we have seen a number of elections all our life, and we know that what will happen. So the MP elections is not something going to be much different. So it will happen only 3 months earlier, so that they may stop giving new orders. But the pipeline anyway, today it is such that, for another 3 years you not able to execute those projects.
Okay. And so where are we targeting? So is it housing, infrastructure? Where are the other new areas? Where do you see the demand coming from?
Very clearly that housing is one major, and one is the road projects and canals and irrigation. These are some areas which is consuming cement as of now.
Okay. And so one final question, debt reduction. How much outstanding debt we have as on 31st March 2018?
That is about 468 crores.
And how much we are planning to repay this year in FY19?
It's about 150
crores. Okay, sir. I'll come back in the queue for a few more questions. Let others take the opportunity.
Thank you. The next question is from the line of Dheeresh Pathak from Goldman Sachs. Please go ahead.
Yeah. Thanks again. So what was the capex in 18 and what is it expected to be in 19?
About 50 crores. 50 crores almost.
There it is normal replacement capex we have planned for 2018-19, and then we keep around 50 to 50 crore rupees level.
50 crores each year, okay. And so on the volume growth outlook for the region, did you share that? I did not, I think I missed it.
Yeah, so as I said, our volume we can tell you. We cannot tell you what the competition volume is.
Okay, no, I'm saying just the industry outlook in the markets in which you're present for
I
FY19.
think it should be between 5 and 6 it should have been there.
Okay. And what is the incremental clinker capacity in that cluster? That growth is also 5 to 6%, or do you think it is lesser?
There is no incremental excepting now Dhar which will come in, that's all.
That is on the west side you mentioned. And
yeah, so there is only incremental capacity which will come in, otherwise there is no incremental capacity.
In next year, and the next 2-3 years after that, is there
I don't see, there is nothing which is visible.
Acha. Okay. And are there players like larger players with brownfield expansion capabilities that can, add capacities in short time?
Maybe I think there are many people who might be having already, but they are not able to sell, so they will have to set up grinding units elsewhere outside the state.
Okay. Okay, sir. Thank you.
Thank you. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Yeah, hi. Thanks for the opportunity. Good evening, sir. So my first question is regarding the sand mining issue in the two states. How is the status now versus like past year, past quarter?
I think that nightmare is over. I would say that is over. There is no issue now.
So we heard that in UP some of the issues have come back again, but so you don't think there are any more issues as such, either in availability or neither in price of sand?
In fact, the government the UP government has gone a step forward and relaxed things as if they were in the past. So what was the tightening? What they had done, they have given up of loose rope there.
Okay, so sir, there was in MP state there was some new policy which came like 6 months back. So similar would be policy of UP government where you auction sand mines and accordingly improve the availability.
I think right now there is no auction. Whatever the mines are operating, there is enough of sand available today.
Okay. And sir, regarding your fuel price, you said 10,000 rupees. So that was petcoke price, but was that also average fuel price book, which was like 9,500 rupees in Q3?
Around close to that. Yes, about 300 odd per gigajoule. Yeah.
So during this quarter, actually, there is increase in the petcoke price, which is around 15% as compared to last year. But you are right, these are the petcoke price.
No, so when is the decrease in the petcoke price?
It has increased. In this quarter, January to March quarter, the petcoke price has increased as compared to December. Okay.
And sir, regarding your now your WHR would have completely now stabilized. So it still like contributes around 20% of your captive power requirement. And what would be now your average cost of production of power?
Would be less than less than a rupee.
No, I mean your average cost of power for you, including WHR.
My average cost of power is about close to around
5.5 rupees, including the waste heat recovery.
What is the total power cost he's asking? So total power cost is about 415 rupees or so, 400 odd rupees per ton.
No, sir, I was asking actually per unit basis, which was told as around 6.25 in last quarter.
Now it will be about close to 6 rupees, everything, just close to.
Okay. And sir, on regarding there is any increase in regional grid power prices in your region? Like annual, there is generally in MP, there is a price increase which happens.
So this year they have give the grid tariff also, but it has no impact on us. For us, it is more or less the same what we used to pay till March.
Okay. And sir, one last question on regarding this volume push from, other regional players. Like last quarter, you mentioned about haven't been this Ultratech ramp up, the price hike would have been like let's say 30-40 rupees. So is that the pressure on volumes is behind now in terms of additional push in volumes from competition?
I think, that is easing out. I think they are finding their own levels. I don't think they are, at least I'm not bothered, we are not bothered too much about their ramp up in capacity. Maybe some other people might have some worries, but.
Sure, sir. I'll get back to you and thank you.
Yeah, thanks.
Thank you. Anyone who would like to ask a question may press star and 1. Please note, this is a final reminder for questions and no further reminders would be placed after this. The next question is from the line of Milind Rajanwar from Nirmal Bang Securities. Please go ahead.
Thank you, sir, for this opportunity. Just a few questions. One, our clinker capacity currently would be around 3.5 million ton. Is that a right assumption?
Okay, that's right.
Sorry?
That's right.
And the grinding capacity would be 5.3?
Just 5 million.
Include
5.3, correct, including... Yes.
Okay, so the 10% incremental that will come through refurbishment or bottlenecking will be on...
Central India.
Okay, Central India. Okay, and the second question is on, sir, the cost, if I see for the whole year, okay, the raw material cost and the power cost, based on whatever information was given to us in the quarterlies, if I aggregate that, then the per ton cost of power is actually flat. And in terms of raw material, it is declining, while the industry is saying is observing a incremental or an inflated trend. So, can you just throw some light on this as to what, how are we benefiting, against what the industry is facing?
If you look at the power, when we talk about power cost per unit, it is inclusive of on average after taking WHR into that.
Yes.
Okay, so that has reduced if you look at it.
So, sir, but WHR is only about 20-odd%, or what would the proportion?
But look at the weightage it has. A power unit which is going to cost you less than 1 rupee, and we have a 6 rupee tariff. So it has
I'm saying the entire energy cost, which includes power and fuel. So we are also fighting the inflation on
the fuel side. If you look at it, okay, my fuel cost has increased by almost 70 rupees about.
Yeah, exactly. That is the question. When there is an increase and an offset by WHR, the aggregate cost then comes down. So is the WHR impact that high that it offsets the petcoke as well as the power cost inflation?
Because today look at it, 73 units, close to 73 units we are using of power. Okay, so that has got a significant contribution to it. It is about close to 400 rupees a ton of cement.
Sorry, sir, I didn't get this. Power consumption has also come down. That's the efficiency part we are looking at, is it?
Yes.
So what
yes,
was that?
Seriously, if you look at it, you look at our power consumption, number of units we have been using, it has been gradually coming down year after, quarter after quarter.
Okay.
We are doing a lot of work on energy and fuel. In terms of basically, we are talking about consumption parameters.
Okay. And what about the raw material costs? Actually, it's showing a decline year on year. If I aggregate all the 4 quarters of last year and compare it with the aggregate of 4 quarters this year.
Yeah, you are right that raw material cost has declined during 2017-18 as compared to 2016-17. It is mainly on account of two parts. One is we have started getting fly ash from the cheaper near sources, as well as we negotiated very well on our different raw material items.
Okay. So there is no change in the mix or something where we, because the trend is that the shift is from PPC to OPC. So in our case, that's not the case.
We are 100% PPC.
Okay, so there we have not seen any shift.
No.
Fine. And the third question is, sir, adjusted to this logistic cost, post GST and all, what would be the like-on-like realization gain?
You are talking about the quarter? For this quarter?
For the quarter to quarter, yeah. If fourth quarter FY17, if fourth quarter FY18.
The freight has increased by around 130 rupees per ton. So out of that, some portions on account of fuel, the diesel price increase, and some portions on account of change in business practice. And that is basically on account of GSR side. You see some increase also coming on account of this freight element. So maybe out of 130, some part you can consider on account of GSR, which is set of each other.
Okay. Fine, sir, fine. That's all from my side.
Thank you. The next question from the line of Dhiral Shah from Asit C. Mehta. Please go ahead.
Yeah, good afternoon, sir, and congratulations for the great set of numbers. Sir, what is our logistics mix between road and rail?
Almost road is close to 58%.
Okay, and rest is rail?
About 42. Quarter. 1 minute, I am looking at it's the reverse.
Rail is 58% in this quarter and the road is 42.
Yes.
Okay. And sir, this time so we have reached our EBITDA per ton of almost 946 rupees. So just wanted to know, with all cost efficiency in place and utilization at a, much higher level, so how much EBITDA margin is sustainable in FY19?
I think, we have been continuously improving this. So I think we will make our best effort to see that we don't tank at all. We'll try our best to keep this at this level. Always try to climb the mountain.
Okay. So you are of the view that this kind of a margins are sustainable. That's about 19%.
I think, if the market supports.
Okay.
If the market supports us by 1, we can definitely get 1.2.
Okay. And so thirdly, so you are of the view that your debt reduction for FY19 will be 150 crore. But sir, if you see, you have been generating a good cash flow year after year. So why not, getting out of the debt, in a one go only? And why, just letting off only 150 crore year by year?
So let us see. If you see the current bank balance of the company, it is around 200 crore rupees.
Yeah.
And considering the cash flow and the future capex, the board of directors has increased also dividend payout.
Okay.
Now instead of 20%, now the board of directors recommended 25%.
Okay.
And considering 150 crore rupees payout, I think this available cash balance will be used for the repayment of loan, capex, and the dividend payout. If we continue doing the same cash flow generation, maybe we'll see it. For your information, next year, again, there will be loan repayment of 125 crore rupees, and that will pay. The management is also working on the different activities. Let us see that how we can optimize the available bank balance and generated cash flow for the wealth creation of the shareholders.
Okay, so FY19 you would be doing debottlenecking by 10%, right?
There has been partially, I would say partially. We'll go step by step. I say there is an investment to be made. So when we see that, the investment, it does not take that capex is going to start realizing value in 9 months' time. So I'm just saying I'm looking at the up cycle and just 9 months before that we are investing.
Okay. And sir, lastly, how is the price realization quarter on quarter? You said on a YY basis it was flattish. So on a quarter on quarter basis, has it been improved?
It is a little better.
Okay, little better. Okay. Thank you, sir. That's it from my side.
Okay, thank you.
Thank you. The next question is from the line of Romil Jain from JM Financial. Please go ahead.
Hello, sir. Thanks for the opportunity. Just wanted to know in terms of your petcoke contracts, what would be the term of the contract in terms of, let's say, tenure and pricing?
There is no contract as such. There are only, the spot point. The prices are fixed for only on a spot to spot. Only volume commitment is there.
Okay, volume commitment is there, but pricing is on a spot basis.
Correct.
Okay, and can you just give us the mix, let's say how much would be import or largely it would be import versus domestic?
Nothing. No import.
Okay, no import. It's all domestic.
Yeah.
Okay. And sir, the other question is in terms of trade and non-trade, can you just give us some indication on the realization difference, how much that can be?
Okay, realization about close to non-trade will be about 300 rupees difference.
300 rupees difference. Okay. Okay. And lastly, sir, if you can just tell us which would be the top maybe 2-3 players or brands in our region, which are competing with us.
Mostly, it is like the Holcim is there, Ultratech is there, then Prism is there, then the Century is there, Here is there, and then Birla Corp is there.
Okay, okay. And in terms of
some players coming from now from Rajasthan, player JK is there. Orient also comes nowadays.
Okay,
so,
okay.
She also comes.
Okay, but since they are coming from Rajasthan, we could assume that they may be, unsustainable because of the lead distance and all. Or
today we have made the prices so attractive in central India. Everybody wants to come here.
Okay, okay. And sir, last question, any guidance on what kind of realization difference would we be in terms of realization versus, let's say, the top 1 or 2 brands or the players?
I won't be able to comment on that.
Okay. No problem, sir. All the best. Thanks so much.
Thank you. Thank you.
Thank you. The next question from the line of Jaspreet Singh Arora from Systematic Shares. Please go ahead.
Hi, sir. Good afternoon, and thanks for the detailed commentary. The question was on this 390 rupees realization increase in the quarter versus same quarter last year. Was it the same across both states, UP, MP?
I think little differences would be there.
So, which would be higher, which would be lower?
I won't be able to comment on.
Okay, fair enough. And sir, what's our mix? I mean, what's the share between MP and UP currently in terms of which contributes how much?
As I said, these are figures I won't like to share.
Okay, and possible to share the swing in EBITDA per ton for the full year? How much was contributed by the NSR per ton? From 780 to 623 to 780, that's about 160 odd.
It is there. No? If you see the waterfall, you will see that, okay, the improvement in the EBITDA.
280,
yeah, it is there.
Okay, 280 is what we're seeing.
Sorry?
The 280 number that I'm seeing roughly is that 3772 going up to 4,000. Is that the number you're referring to?
That I'll have to check the details of it because I'm just having the quarter figure in front of me.
But 200 rupees is on account of GSR.
Okay. Fair enough. And so this capacity utilization, 85% for the full year, is there room to take it up to 90% on a whole year basis?
Yes, why not?
No, I mean, I'm saying so 92% was for this, the March quarter, which is typically the best quarter, but given we have maintenance shutdowns, we have monsoons as well. So you're saying 92% for the full year is possible based on current capacity?
Yes, we can run at 99 or 100% utilization, not an issue.
Okay, so 5.
Plant availability is very good.
Okay, so out of 5.3, you're saying up to 5.2 million tons is definitely doable?
Not a problem.
All right. Yeah, I think that's about it. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Dheeraj Raj from SBA Securities. Please go ahead. The next question is from the line of Dheeraj Rai from SBA Securities. Please go ahead. Mr. Dheeraj Rai, your line is in the talk mode. Can you please go ahead with your question?
Oh, hi.
sorry, I just missed out. So I just wanted to know clinker to cement ratio.
About close to 62.
Sorry?
62% clinker ratio.
Okay. Thank you. That's all.
Thank you. The next question is from the line of Parag Khare from TCS. Please go ahead.
Yeah, thank you for the opportunity again, sir. Sir, what is going to be our tax rate for FY19?
We're talking about corporate tax rate?
Yes.
Currently, we are paying MAT. 2018-19 fiscal year also will continue paying MAT. So it will be around 22%, the tax payout.
22%. Okay. And sir, I know you may not be able to comment on the forecast, but do you think things will start getting better and better from here, considering the expenses and the input costs don't go up? Do you think the better days are ahead for the industry and for Heidelberg? Or there may be again some pressure on the demand?
I think that this thing should sustain now. It's a sustainable sort of a growth.
Okay. And from the demand perspective as well, and from the sales numbers as well, because the sales numbers were not that great this quarter.
Little bit dip you can see in monsoon, depending on how the monsoons come into the state in Central India. Once it strikes in Kerala and then it proceeds further, we will keep monitoring it, how it will going to pan across into the central.
All right. Okay, sir. All the best for Q1 and FY19. Thank you.
Thank you. The next question is from the line of Abhishek Jain from Vallum Capital. Please go ahead.
Sir, how you are seeing on a EBITDA per ton basis the difference which is created by your Qtr4 system? So can you just quantify the thing like on a EBITDA per ton basis? And the second question from my side is like how HAM model is like creating a revenue, like how revenue is being shaped up by this model propagated by the government for the in the infra space.
EBITDA, Abhishek, what we have given you already in the waterfall, we have given you how the EBITDA has spanned. So you can go through the elements of that there itself in the report is there.
The question is that how is the contribution of the... Is your question? So if you see the presentation given by the MD sir, the slide number 5, we have mentioned that what is the net power generation of the WHR. It is around 70 million units during 2017-18, and we have arbitrage of around 5 rupees per unit. If you take that amount, it is around 75 rupees per ton of cement contribution on account of WHR.
Okay. Okay. And about this HAM model, like your commentary for the same?
What is it? Pardon?
Hybrid annuity model for in the infra space.
No. I can't hear you what you are saying.
Hybrid annuity model in the infra space.
Energy model.
Hybrid annuity model.
Annuity model. That is for infrastructure or is it for?
Yeah. In the infra space.
Hybrid annuity model for infrastructure funding. I am not... Hello. 1 second. Just a second. But the question is not clear to us because your question is pertaining to either funding in the company, then there is no loan basically on account of either from the market or the third party.
Sir, I'm asking how like revenue is being shaped up by this hybrid annuity model. Like is the cement consumption is like increasing by that thing?
This is hybrid annuity model is applicable for infrastructure projects where they are saying the government is sharing the burden of land acquisition. So is it? I don't think he's mentioning that. Is it? Okay. Has it impacted our revenue? Maybe we can discuss offline to understand your question and then we can discuss it here.
Okay, sure.
Yeah. Okay.
Thank you. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Hello. Yeah, sir, thanks for the follow-up. Sir, you mentioned about fly ash, procurement of fly ash from cheaper sources has helped your raw material cost during FY18. So generally the commentary have been, although it's more from Rajasthan players that the fly ash cost is increasing because they are procuring from longer distances because availability is generally getting impacted. So for your case, it is generally, your commentary is slightly different. So if you can throw some light on this.
See, we buy on sometimes on certain contracts, certain times, some places, we keep observing where the pockets of fly ash are full, okay, when they are not able to evacuate. So we go there and we discuss, and, if that comes at a cheaper price, the people are ready to move our trucks to those markets and fetch it. So, it's a question of how we manage and how much closer we are closer to the market.
Okay. And
it's basically nothing to do with, long-term contracts. It also considers our spot purchase.
Okay. So, sir, what would be general fly ash cost per ton basis for the company?
I'll have to check.
So, it will be around 800-900 rupees per ton?
No. It will be far cheaper. About 400, between 500, around 500 max. 500, 510, 510. Not more than that.
Okay. And sir, regarding your lead distance, you have said lead distance has come down to 355. So the previous comparison figure would be around 400 kilometers?
No. So it is, it was, yes, around 365 or 370 around. 360, around 362 or something it was, if I remember, 65. I don't have it right now. 1 minute, just let me check. Just a minute. 365, 10 kilometers. This includes I think it would have been just about 10 kilometers reduction or so.
Sure, sir. Thank you and all the best.
Thank you.
Thank you. Due to time constraints, we'll take a last question from the line of Milind Rajinwar from Nirmal Bang Securities. Please go ahead.
Yeah, thanks for the opportunity again, sir. I will just and follow up on my earlier question itself. Our WHR was commissioned in February 16. So is there anything incremental that we did this time to get the power cost, muted in FY18 over 17?
No, it is like this. I'll tell you just, WHR takes about sometimes a longer period to stabilize. Okay. So the issue is, over a period of time it takes, and still also I would say it is not yet fully stabilized.
So what would be the drawdown, sir, in terms of total megawatts?
Yeah, again, it's not a question of 2 megawatts. It's sometimes, it all depends. WHR is a very, very sensitive piece of equipment in the plant. It's the most sensitive piece of equipment. And, it totally draws its fuel is in terms of steam from what you produce from outside for output from your plants. So if there is anything fluctuation in the plant operation, you will get a hit on WHR straight.
Okay. So, sir, my next question is, are there any further cost levers available for us for the next year or two that will see the cost probably maintained at this level, or whether we are seeing some inflation getting added here?
Inflation will come in, no doubt about it. But we have to take that inflation out of the customer's pocket.
Yeah, that would be on the demand-supply dynamics. But from our perspective, we see some inflation coming. FY18 probably may not be in repeat year for FY19. Is that a safe assumption to put in?
Why do you say that? First of all, I don't understand, because, if you look at our results year after year, okay, at the PAT level, the things are very different.
No. So I'm only restricting myself to the cost aspect.
As cost aspect, as I said, the costs will go up. We cannot control costs. Okay. I can only tell you that, how will I consume my materials. So whether I am able to, my consumption parameters are the best in class in the world, in India, that's more important for me.
Okay. Okay. Right, sir. Right. Thanks.
Okay, thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Vaibhav Agarwal for closing comments.
Yeah, thank you. On behalf of Phillip Capital, I would like to thank the management of Heidelberg Cement for the call, and also many thanks to the participants for joining the call. You may now conclude the call. Thank you very much, sir.
Thank you.